This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Let's hit our post-game chart deck, which this week is titled Post-FOMC Moves in the Markets. Listeners, you'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, just go to our homepage, macrovoices.com, click on the red button that says Looking for the Downloads. Patrick, what do we have here on page 2?
Eric, I just always want to start each week with the S&P 500 chart just to update the trend. And, you know, we're always looking for where are the key turn points in the markets. But there's one thing that is very clear that's been going on all year on the S&P 500, which is every dip has been bought. These corrections on average last just a few days. They all find mean revert down towards, in this case, the 50-day moving average does a great job of capturing that. And we're continuously breaking to new highs. And there's absolutely no reason to see why this trend is at risk at this moment. And so really at this stage, if the market follows its natural rhythm, we could certainly see advances toward 4,500 on the upside in the coming week or two. I was looking to see whether the FOMC meeting was going to be a catalyst that could potentially trigger some selling. We've seen that in the past, but at this stage, it really does look like a trend has been established, and there's no reason to believe immediately that it's reversing. And so I think at this moment we have to respect this prevailing trend. Now, Eric, what I don't have on here is the chart of the S&P 500 equal weight index, which we have compared in the past. And it is worth noting that while I don't have the chart up here, that for the first time in months, it has actually broken out to a fresh new high. And so one of the things that we've been talking about is the lack of market breadth, and that we really needed to see the broader market start participating. And with the breakout of the equal weight, I asked the question as to whether or not that is what the market needed as a tailwind to make another bull advance. And so that's certainly on the radar for me to watch all of next week.
Let's move on to page 3 at the EURUSD cross. Boy, it sure seems like the FOMC put a floor on that one, huh?
Well, we were at a major support line and we were losing momentum moving toward that support line. So it really isn't a big surprise that we're getting a reaction. And even a very typical reflexive snapback rally would easily take us to this 119, 120 level where the euro is slowly approaching. But the real information will come in the coming week or two as to whether this was exactly that, or just an oversold bounce, and then we'll have a resumption in trend, or whether this strong dollar, weak euro trend that's been in place for 2 months is over. And I don't think 1 or 2 days is enough to already draw conclusions, but we do know a major support line is held. And on the short term, there might be a little bit more upside, but I think over the next week or two, this is a very important currency cross to watch to see whether or not this is establishing new trend or whether it was just an oversold bounce.
Let's move on to page 4 and look at my favorite subject, which is commodities. Boy, there was a significant resistance line. Looks like we're seeing a breakout.
Yeah, I think this is really interesting because we're looking at the Bloomberg Commodity Index Futures, and what is interesting is that while oil's not at making new highs, there's all sorts of commodities that are off of their highs, whether it's copper, lumber, gold. You can take all of these commodities, even many of the grains, all pulling back, but yet the Commodity Index Futures didn't get the memo, and they certainly are breaking 52-week highs and not looking back. You know, what is driving this commodity index? And more importantly, will we see a lot of these other commodities join the party? There was a really good breakout in copper, gold, and crude oil strengthening. And we'll look at some of these charts right now, but it'll be really interesting to see whether this kind of 2-month pause in the commodity index futures that's been consolidating is over, and whether or not a new bull trend resumes in this index.
Our regular listeners know my favorite commodity is crude oil, which we have on page 5. What's going on here?
Well, I mean, I could ask you the same question, but in the end, Eric, what is interesting is just pointing out that correction that happened here in July went and tested all of those previous highs back in March and May. And as it made that pullback, what was and always is very interesting technical information is that when you have a correction, if the buy on dip traders immediately use that opportunity to buy it up and recover the price quickly to continue to show that the primary trend that was in play is still in force. And so far, the bulls have done a pretty good job recovering the price of oil, which in the back of my mind has me still thinking that the bulls may still have gas in the tank. What I think is the most important thing to watch is as we approach these previous highs, will the bulls be able to defend any selling pressure that comes there, and will they be able to break it out? If it does, though, there's a number of measured moves that target 80-85 on the upside, which would certainly be a huge tailwind to the cyclical trades and potentially even a reflation trade coming back in if oil was able to do that. Don't want to already be saying that this is money in the bank, but boy, this is something to watch into next week.
Yeah, I think that it really is going to come down to whether or not those prognostications of big inventory draws continuing through American Labor Day, the one that happens in early September. If that holds true, I think we're going to at least 85. Of course, you never know. There could be some major news event, but barring something else, I think we're going much higher.
Right. So what I wanted to, though, touch on was energy stocks. And what is interesting about this to me, Eric, is that, well, look, okay, oil's right back toward its 52-week highs, and you're not really getting a big edge on buying crude oil necessarily up here. But what is interesting is many of those energy stocks that were benefiting from oil's trend since November through to the second quarter of the year have been in this multi-month correction. In this case, I have the XOP ETF, which is that Spider Oil and Gas Exploration Production ETF. They went through a 20% correction on this index. And there are some refiners and other oil stocks that are down 30+% during this correction. And if oil was to break out to fresh new highs, it would be really interesting to ask the question as to whether these energy companies also establish lows and begin trending along with the commodity, because here you're able to buy the dip at a much more favorable level than chasing oil higher. And I'll be watching to see whether these energy companies start to get the tailwind benefit if oil does make that breakout.
Patrick, it's going to be very interesting because the Biden administration is not exactly a friend to the oil and gas industry. So although I think oil prices are going higher, how profitable oil and gas companies are going to be is really going to depend on the regulatory environment. Let's move on in any case, though, to gold futures. Boy, we're right on the line there, just flirting with that 200-day moving average.
Yeah, Eric. So I put on the simple moving averages because that's the ones you were referencing at the start in the market wrap. And we're actually at a really interesting moment. Like, first of all, the velocity of the breakout is relevant because we basically in one day were able to beat the last 2 weeks of trade range, which in itself is showing that there's some very motivated buying coming in this morning. And we're approaching a very key level for the breakout because when you look at almost all bull trends that have established on gold, they've done it above those moving averages. And we're really about to get the valuable information as to whether or not the sell-off that's more or less been, well, I mean, you could argue that the sell-off started back in the summer of last year, which spent most of the time below that 50-day moving average. But if we get above these moving averages into the next week or two, it'll be really interesting to see whether gold finally begins trending higher and whether this is finally the beginning of a gold move that we've been waiting for a while.
Well, the question, too, is going to be what happens to the gold miners if gold moves higher. Let's take a look at page 8 and see what's going on with the GDX.
Well, similarly, you've had consolidations in the miners, and in similar fashion, they didn't make lower lows than those February-March lows, and we're getting a nice breakout attempt on the upside of the gold miners. It will be really interesting to see whether all of this comes in. This is a very interesting moment for this move to start happening altogether, and all of them are breaking out. One day doesn't make a new trend, so I don't want to already come out and say that this is guaranteed to move, but this is how a lot of new trends begin. And so one of the key things to watch into next week is going to be whether or not gold and the gold miners and silver and all of those precious metals start to come to life, particularly since we're seeing real yields, getting even more negative, which is typically a tailwind for the gold markets. And so anyway, that is what we got to watch for next week.
Folks, you can get Patrick's chart decks every single day with a free trial of Patrick's service, Big Picture Trading. Information's on page 9 or at bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the Internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.